Hi guys, I hope you're doing well. This is going to be a quick update on a few stocks and watches that I've got on at the moment. Just going to be covering the bases I have been recently as I'm going for a longer position, and I've talked about that before. Watch previous episodes. So here I've got Carnival. I've got it on a day chart. Carnival is looking very good at the moment. Firstly, Carnival has been making range-bound movements, and the range-bound movements have been the case where it has been going off support and resistance lines. Now, it hasn't been exactly a perfect ascending triangle, but I've noticed several things. Number one is we have a diagonal line just here. The second thing is there's a resistance line approximately around here. Now there is an area of breakout which is here, but that can happen as well in an ascending triangle. The price has continually moved upwards, and in addition to this, the price has continually gone up and down in a range, to the point where we now have touched this resistance line 4 times. We've touched this diagonal line, which I'll show later on a different chart, 3 times. I'm curious as to what the next movements are. There are 2 possible alternatives for Carnival. The first is that Carnival may completely falter off and just go in a range-bound movement this way. Another possible option may be that Carnival will go up and down in a little range and then make a big movement. We're looking towards the 17 to 1800 area. It then may peak off again, depending on the time of year. The big test for this share will be towards the early part of next year, getting ready for the summer season. Once June, July hits, Carnival should hopefully have a lot of their cruise liners out and about and hopefully taking people on cruises. That's the whole business. So I'm very positive at the moment. And my position at 1480 was a good point which I got. I could have guessed, and there were some movements where in one of the days for about 5 minutes or 10 minutes, it went down to 1460. That'd be an ultimate entry. But I'm not too worried otherwise. There are some things on the horizon, however. One of these is the Evergrande story, which is happening now all over the world. Of course, Evergrande being about China and the property developer being in massive debt. Now, you can be in 2 minds. You can be in the first mindset, which states, I think that this is going to trigger a financial collapse around the world. And we're going to have something similar to the GFC. Because of all this massive debt that's not paid, Evergrande has had to borrow this money from institutions worldwide. The second is that China organizes Evergrande to be able to pay its debt by stretching it out, because its collapse could then trigger a whole bunch of other collapses in the property sector and the economy overall in China. Now, China is very controlled. Everyone knows that. My bet would be that China's going to sort this out, especially it doesn't want to collapse when it's trying to continue its consecutive years of growth. And it's had over a decade where this is the case. So I think we're still in good position at the moment. The market needs days where it digests on bad news, possibly. And the main reason is simple. People have to take money off the trade to get paid. Institutions have to do this to get paid. When there's a bad news story, it's just an opportunity. Unless it's significant. COVID was significant. An international crisis. GFC, significant. An international crisis of money. Until we see those signs, it's hard to say. we have to keep watching on the property saga that may unfold with China. But for the moment, I think it's fine. We'll wait also for the Fed and their decision coming up, which a lot of people are a bit nervous about. We'll go back as well to Auto Trader. Now, Auto Trader has ended up to continue its never-ending reversal. And you can see this here. At the moment, it's made highs and lows significantly. I explained this from my last video a few days after I sold. It made a big short from 644 to 620. It's continued to base around 609, 610. I saw this a few days ago on Monday evening when it finished, and it was, in my time, an exhaustion gap I saw rather than a pure island reversal. This island reversal may have more exhaustion gaps, or it may now continue to flutter and come back up. When I look at this chart and it's so wide, my money is that it's going to continue to go down and base itself maybe around 590. JD Sports. JD Sports has sort of petered off from its highs of around, it was up to 1161. It's now 110. So it's about 3 or 4% from its highs. We'll see where this goes. My guess is it may move higher. It may go in a range. You could buy in the hope of this increasing, but you're better off just to wait and then see if it does make a range bound channel. In terms of international markets, let's have a look. So here we've got the ASX 200, and you can see at the moment we're in this downward spiral. It's actually crossed over the 50-day moving average. Sorry, it's crossed over the 100-day moving average. It's already past the 50, which is here. So it's crossed down the 100, and it has risen up the last 2 days. This was the Evergrande story coming out on the Monday. Australia is impacted massively by mining companies in our market. So it was a big deal. Something which is significant is the volume. I'll show you this now. So this was the volume last Friday. Have a look at that. 1.6 billion shares. Not any small feat. And it's petered off as well. We can see here with the FTSE, it has gone down on the Bollinger Band, and it's right near the 200-day moving average. Not where you want to be as a chart. And this is critical territory. If it passes down the 200-day moving chart, officially the FTSE is going to be going in a bearish decline. So we need to definitely make sure that this does not happen. How? We can't really tell. We just have to wait. So it goes up all the way and then peters off here. Currently it is at the 100-day moving average. Had a candle wick, touched it, bounced back. Yesterday, Tuesday, hasn't been near it. Today, which is Wednesday, markets haven't started yet for the US. We need to see some sort of bounce and correction. If it goes down the 100-day moving average, it's not looking good. 200-day is way off though. Unlike the FTSE, it's not anywhere near in a bearish potential decline. But I also noticed something else. Almost a year ago, in October last year, we had the same thing. where the market was starting to gain a little bit of momentum, had a big drop in October. Right about here. Take this out, and the market then has continued along this trajectory for the next pretty much year. Alright, that's my view, my take, my own opinions, but I hope you enjoyed them. I will see you next time. Thanks for listening.